Energy here just, getting caught up a little bit. You can't see that Friday price action, but caught up in the crude oil storyline, clip that, 20-day simple moving average. And like I said in finance, let's see how it tests that. But if finance breaks the 20, you could see something similar in finance that happened in energy. I do think a lot of us do like these deeper pullbacks, though, in energy, Mark. Obviously concerning in the daily price action, a little bit of a deeper retracement. You take a look at some of the more maybe not popular trading names, the big dogs of the world, the Exxon Mobil's. You're seeing these standard deeper retracements here. You've been talking about these deeper potential pullbacks in energy for the previous week. Are they getting to these lower levels where you're starting to see support forms, starting to get a little bit excited on the potential opportunity, or do you see further downward moves in price here?
We pull up XLE. I know I'm a no-brainer buy at the old breakout level, and if you go to weekly chart, you can see it a little bit cleaner and maybe a little bit longer time frame than what we have here. That old breakout level that is around 43, 44. In that range, right? Nitpicky with the rising 20 weekly. I'm a no-brainer by adding exposure. And I talked about this a little bit on the weekend prep class with our pro members last night, is that I have exposure to energy, right? And so I have exposure to energy, but I'm willing to buy the dip. And if we dip back to that level, it's a no-brainer. Now, if we might not, right? I mean, energy still, recent price action notwithstanding, a very high sentiment area moving forward, just having just a nasty little stretch here over the last week. Mm-hmm. And we might see consolidation before that, and then a reversal pattern. And then, but basically it's like, I'm going to buy the dip. I have my existing exposure, right? And if I buy the dip, then I'm buy that dip. And then if it moves up and rips for a little bit, I treat it almost like a swing trade or a quasi position trade. And then it moves up. I take profits on that while keeping my existing exposure that is more of a longer term position trade on that. And then if energy chops for the next 3-4 months, not out of the realm of possibility, I can rinse and repeat that process. But like when you buy the dip, when you already have a lot of exposure, I think you look to take profits at that some point if it continues to go up while keeping your additional exposure. It's just that balance of trade management.
And when you're looking at the potential dip here, I mean, you got a few different levels that I think are interesting. And you don't have really anything intraday until you get to like 46.75. So that's where it kind of starts right there in that 46.75. So, if you're buying the dip here, you're literally just buying the dip.
You're just buying the dip.
There's no technicals. There's no there's nothing that is actually supporting you. Like a true buy the dip to me is based on analysis.
Absolutely,
like it's always
100%.
based on analysis. So if you're buying the dip in energy, literally today you have zero analysis. You don't have technicals supporting you. You don't have market themes supporting you here today. You're in a volatile session here with some separation in the market. You have nothing supporting you outside of just random market mechanics. And certainly, right, dead clocks right twice a day. It could work, but you don't have anything supporting you. I like things supporting me, like support, like technical support. And so when you're looking at this, where this could start forming, I really like energy in this 46.75, 45 range. I think you got some really significant support levels here. Number one, on the weekly chart, Mark, that's your breakout channel right there, 44 to 45. That's your breakout channel there. You also have that rising moving average coming in. And if you'll remember, guys, everybody overreacted to energy here. Like literally everybody did. And what did it do? Find support on the 50-day moving average, right? Because everybody's like, oh, what if we're going to get this? Well, you did. And look at the 50, sitting right under support. Well, here, once you start getting into that intraday levels of support around that 46.75, 46.50 level, you start getting into this major type support levels between 44 and 46, where the rising 50 is and the horizontal breakout channel is on the weekly chart. And so I love starting something with, give me another couple days. Shake out a few more. Give me a couple of days, because that's going to get everybody to freak out. And then what do we have? We have, I don't want to say that support is the U.S. military type support. What would be like the third best military in the world?
Currently?
Currently.
I'm going to give it to Canada, our dear friends up north.
Canada? Canada?
Oh, we got a lot of Canadian friends.
80,000 South Park
Mark.
references just came to my head.
Mark, I want a game in the podcast today of ranking the military strength of the top 20 countries around the world. I want that game.
The US, China, the UK probably has a very strong military.
It'd be UK probably.
Yeah.
It'd be the UK probably. Depending how you categorize Europe, I guess. But it's let's just put it like this: it's not the U.S. military type strength. It's not close to the U.S. type military strength, but it's right under that. And so I do get a little excited when you start to see that type of strength of a potential backdrop that fits a sector that has been as powerful as energy. And so I do think dip mechanics are alive and well here. I just think those dip mechanics are a little premature, and it could rotate. We could see intraday support levels form here, no doubt. I'm just saying you don't have the analysis yet.